Hello and welcome to the INSEAD Emerging Markets Podcast, where we interview business leaders and emerging market experts on business innovations, market opportunities, and macro-level trends in emerging and frontier market countries. Join us for the next hour to dive deep into the world of emerging markets as we speak with top performers who are successfully investing, working, and living in these markets themselves. Welcome to the INSEAD Emerging Markets Podcast. I'm your host, Nick Lal, and today I'm joined by Ope Sonusi, the founder of Bluum Finance. Bluum is building the infrastructure layer that allows fintechs and financial institutions to offer investing and wealth management products across Africa and its global diaspora. It's a really interesting startup. It sits at the intersection of fintech, capital markets, and something that we haven't talked a lot about on this podcast, but is actually very important for emerging markets and their growth, which is how capital flows between emerging markets and the rest of the world. And so in many ways, Bluum is building the rails that connect those two worlds. And so, Ope, it's great to have you on. But before we get into the details of what Bluum is doing, I'd love to hear about your personal experience. What did you do before Bluum? What led you to the idea that this is something that is needed for the African diaspora? And what was the moment where you realized it wasn't just an interesting problem, but it was a company that you wanted to build?
Yeah, thanks, Nick. Thank you for having me. It's a pleasure speaking, and thank you for the opportunity. So over the last 15 years, give or take, I've been in the US as a tech professional. I'm a software engineer by trade, but over time, I've worked across multiple industries, mostly fintechs. We've built banking solutions, custom solutions for enterprises and card issuing programs. So I've mostly been in the fintech infrastructure space. But more importantly, as an immigrant in the US, a tech professional at that, you've made good money, right? And the financial solutions I have solve my ability to send money, spend money, and this is a cross-border payment, cross-border spend, cross-border transactions. What's missing in that stack is how I can build wealth cross-border, because my life is really across multiple borders. And that's a original story for a lot of immigrants, the African diaspora, or even natives in emerging market. So I started looking for representative wealth advisory. Can I find a wealth advisor that understands me as a professional, high-earning professional whose life spans multiple continents, essentially? I couldn't. I'm Nigerian, so I went back home, spoke to a few firms out there, and the solutions are just not comprehensive enough. They're not natively built for me, and that's how this came about. Like, how can I find representative wealth management or financial services that goes beyond saving, spending, or just income? And given my experience as a software engineer, majorly in the financial fintech infrastructure space, I started building something that I needed. That has evolved into what Bluum is today. Building that solution, quickly found out that the problem wasn't the ability to build a solution, it's the missing infrastructure gap to execute financial advisory. So we started working on that infrastructural layer and discovered that the best way to serve the segment that we're looking to serve, which is emerging market and people out of the emerging market corridor, is to offer this to existing consumer fintechs as a product versus this being another B2C app. So that's the original story.
Definitely. They always say that the best businesses are ones that you start solving a problem that you personally actually have. And so it's cool that you saw that problem and you actually had the technical skills to develop something like this, because it's not an easy solution at all. We'll get more into what Bluum does later, but you're basically doing what maybe 5 or 6 companies in the US do all at once, and then try to serve the whole African continent and the diaspora with that solution. You touched on this a little bit, but what was the step from you coming up with that idea to forming a company? You know, you have a few co-founders and employees already who are all really impressive. What was that process like?
It's not a straightforward process, as you can imagine. From discovering a problem, then looking for solutions out there and seeing if you can find. I didn't want to spend my time building an infrastructural project, to be quite honest with you. It's not sexy, it's not easy, it's not a quick get-rich game, but it is a solution I feel strongly about beyond solving my problem. The impact of solving that infrastructural problem for emerging market is huge. So this is a mission-driven project for me. So it started out as, okay, let's whip up an API that gives me access to a wealth advisory AI engine that I started building. It's incomplete for me to have AI wealth management where I have to go find another platform to execute whatever advice I'm given. I feel any solution that doesn't include execution is incomplete in and of itself. So I started building the execution layer. Because I'm Nigerian and I'm cognizant with the Nigerian capital market, that was the first market I looked at. Spoke to broker-dealers in the market, found one that is excited about the opportunity and the mission. So we built that integration layer. Did the same to the NGX. I also did the same to the US capital market because that's really where the global market starts, right? I think the stat currently is 80% of all of the global capital market is in the US. 80%. Imagine that. Right. So we integrated with the US capital market. We added on the Nigerian capital market. And we started testing out the AI wealth management advisory for that corridor. It's a huge remittance corridor, Nigeria and the US. And it's about 20 billion in the remittance dollars currently. And there's been a lot of talk about how repurposing just 10% of that 20 billion could be impactful to the Nigerian capital market. And to that, I answer, we can't just wish that into existence. We have to build the access rail for that to be possible. Because unlike remittance, investment dollars has competition. So if it's not easy for me to invest, there are ready-made alternatives and markets that are much easier for me to access, or asset classes that are easier for me to access. So we are fundamentally solving the access problem so that we can provide this additional liquidity to this local capital market.
Definitely. Why don't you tell me a little bit more about why that is? What is the current state of investing in wealth management in Africa or targeting the diaspora? And there have been some really successful fintechs in Africa and in Nigeria, Kenya. Some of the most promising fintechs are out there, but this is a problem that hasn't been solved. And you are not going to be the fintech itself that does this, but you're going to enable fintechs to do it. So wondering if you could talk a little bit more about why it is so difficult and how you're solving the problem.
So there's been a lot of successful fintech out of those corridors. Out of Brazil, you have Nubank, you have even Pix as a framework or as an infrastructure has been successful. And the same with fintechs out of Africa. Flutterwave being one of the largest fintech out of Africa, Paystat. But fundamentally, they are strong at one or two layers. It's either payments, wallet, card, banking, lending. Investing is a whole different ballgame, and it's highly regulated. And I'm not saying that to say all of the other segments of fintech is not regulated. Investment is just much more regulated, and it's not one stack, right? Investing includes licensing, broker-dealer connectivity, custody, execution, settlement, compliance workflow, disclosures. onboarding, reporting, suitability. So it's a lot more than everything else we've seen for the fintech successes out of this corridor. And that's the complexity of what is required to build investing product. It compounds. And that's why we've not seen a lot. And some of it is just local market nuances. The markets are not mature, the infrastructure, they've not caught up with innovation in other aspects of our lives. Not until 20 years ago, mobile phone penetration or internet penetration in some of these markets is non-existent, right? So the infrastructure hasn't followed the advancement of technology, and I think that's one of the biggest reasons. But if you take this individual stack of requirements to build an investment product, regulations being the biggest one, and you expand it by jurisdiction, right? Now your surface area is multiplied. It's because from each capital market to the next, you have to repeat all of this stack of solutions that you have to build from zero. So you're not building on existing layer as it is in the West. You have to build out everything. So I'm guessing it's just the amount of work required is why we haven't seen the success in this space.
Yeah, definitely quite an undertaking that you and your team are on. You've described the problem really well and how you identified it and where Bluum comes in. I was wondering if you could just simply explain exactly what your solution does and what it would look like in practice if you were working with a fintech, just so the audience can understand more fully if they're not coming from a tech or financial background.
I just described how, compared to payment, right? Investing is like 5 stack into one product. For an existing fintech that wants to launch investing as a feature, because you already have customers, you already have customer trust, you have brand penetration. And even from a business strategy point of view, it is worthwhile as a growth strategy for existing fintech to add on and a new feature, and investing is a natural wheelhouse for that. The effort required to do that is just too enormous of an undertaking for an existing consumer fintech to do, and that's why they're not doing it. Where Bluum comes in is we provide the infrastructure layer that combines all of this into one API for you as an existing fintech to simply just use this one API to launch investing. And beyond self-directed investing, with Bluum, you can also launch an AI, personalized AI wealth management service to your customers. So it's licensing, execution, custody, compliance workflow, advisory layer, all bundled into a single API for use. So as a fintech, you do not need to go staff a whole new compliance department. You do not need to build out your own AI wealth management. You do not need to speak to broker dealers in Nigeria, then go speak to broker dealers in the US, then go speak to broker dealers in Brazil, just to get and London, right? Just to get global market access. Bluum gives you all of that out of the box. And you continue to manage the experience for your users, right? You can then use Bluum APIs to build native investing experience that is consistent with how your users use your app currently. So say a new bank out of Nigeria, Brazil, or Philippines wants to start giving their customers ability to buy global stocks or get personalized advisory. It's then consistent with their current workflow to simply add a new invest tab, all driven by Bluum's API. And because we're licensed in or have broker-dealer relationships in those regions, you don't even have to undertake the regulatory hurdles to make that happen. So that's where Bluum comes in.
Definitely. I mean, it's a huge problem that if you solve it, it'll be really transformative. If you're a Nigerian professional today in New York or London or anywhere, and you're trying to access global brokers like Charles Schwab, what difference does it make now that Bluum could offer the solution to fintechs?
So for existing fintechs, the solutions out there are rightfully so. They treat the emerging market as secondary. But for Bluum, we are emerging market first. It's native to our platform. And there's been trade realignment, policy shift globally. Right. Now you have emerging markets countries dealing with each other even more directly than was the case like 5 years ago. And you had on that the performance of emerging markets over the last 3 years. Right. Some of the emerging markets out of Africa have returned 50% in USD terms on the average. Right. Those are numbers you can't beat even in US market. And if those markets are native to me as a citizen of that country or region, then they should be as local to me as the New York Stock Exchange. Right? Like, these are companies that I'm used to. So these are companies I know, and probably companies I use their services. So I should be able to invest locally. So for us, emerging market is native to our platform, and the cross-border investing is just how we're not trying to bundle everyone into an ETF to get exposure to emerging market or an index fund. Or no, you have full access to the market, all equities, fixed income, multi-asset access to each of these emerging markets. That's our thesis. And what that allows is the ability to provide comprehensive advisory, because now I have full market access, and whatever advisory I'm providing is not limited by market access. That's one. Then information discovery. I need to know what's happening in those markets. And if I'm going to invest in those markets, I also need to be kept abreast about the companies in those markets. So that's two for us. And just the ability to layer on the existing cross-border payment rails that are happening right now. So that's what we are for. Those are policy changes or technology advancement that is making this possible right now. Cross-border transfers along these corridors have improved massively. And that's why real-time investing now is possible, because yes, I can move money to Nigeria in seconds, which means I can trade in seconds if my money can get there. So we're just following these cross-border payment corridors and following the trade realignment and allowing cross-border investing along those same rails.
Yeah, definitely. I think that it's always good to take advantage of macro trends like that, where infrastructure is just changing and maybe there's not as much information about that globally, but it really is changing the game. And it's something that if you can become the leader and take advantage of, so obviously massive potential. And to the points you were making about, some of these markets going 50%, I think this would be useful for anyone, not just for the diaspora. I think we talk a lot about on this podcast that the MSCI index is not necessarily the best way to invest in emerging markets. A lot of times, if you look at particular countries or particular industries within countries, you can make huge returns. And I think this could be definitely a way to do it for people who are interested in some of the returns that you can get in emerging markets. Maybe to make this picture clearer, maybe you could talk about the size of these markets, the diasporas, the capital flows going between these countries, just to give people an idea of the potential here.
Global remittance dollars right now is at 600 billion. That's just remittance flow of funds. And some of the largest corridors are Southeast Asia, Africa, and Latin, expectedly. Nigeria is doing 20 billion in remittance per annum. I think Kenya is about 5 billion. Philippines about 40 billion in remittance. And India is doing 130 billion in remittance. So that's massive flow of funds. And this is not impactful funds. It's just consumer funds. And repurposing, just practical example, 20 billion goes into Nigeria, just disappears, right? No, it's not going to investment. It's not going to public equity market. It's not going to real estate. It's not going to infrastructure. Some of it will find its way there, but formally, right? We're not seeing that happen. If you were to repurpose 10% of that, that's $2 billion going into the capital market. The current market cap of the NGX could use a $2 billion capital injection. So each of those capital market could use investment dollars coming from remittance. And that's one part of it. Cross-border within Africa, for example, retail investing is growing. Retail participation is growing. Individually, the markets are not deep enough. But I believe if access across border is solved, right, then you can start seeing retail participation markets that can support the kind of retail participation that we're seeing. And there's demand. There's really demand, especially from the diaspora, to invest in the local capital market. Everyone wants to take advantage of this cycle of emerging market growth. The opportunities are in the emerging market. The growth opportunities are there. And even sophisticated allocators are beginning to allocate it into emerging markets right now. So there's no reason why retail can't follow those same path.
Definitely. We've talked a lot about remittances as well as just the size of these markets, how they're going. Do you have a focus in terms of, are your ideal customers more African fintechs, diaspora-focused fintechs, consumer fintechs in or from emerging markets? What's kind of your goal?
So our goal is to really reach emerging markets, so fintechs out of emerging markets. We're starting in Africa, but we're not limited to Africa. Consumer fintech out of Africa, cross-border payment, neobanks, the same type of companies out of Latin America corridor, out of the Southeast Asian corridor, and even consumer fintechs in the US that wants exposure to emerging market. A lot of them are asking for a global investing access and personalized wealth management. That's a big use case for consumer fintechs in the US, servicing a lot of the diaspora and emerging mass affluent segment. So our product is positioned to be useful for any consumer fintech holding customer balances, and it is not limited to a particular continent or region.
Sure. I guess since you're kind of building the rails for fintechs, it's not necessarily going to be in one place. It's anywhere that infrastructure is necessary for fintechs to then market to their own local consumers. I guess the thesis kind of is that investing products will increasingly be embedded within fintech apps rather than standalone brokerages. I was wondering if you could talk a little bit about that and why that trend is happening, where you see it happening, and why that's led you to your thesis in terms of where you believe investing is going.
So when we started out as a B2C product, but we quickly discovered both the infrastructure gap. So that's the missing access to multi-market, multi-asset classes. But beyond the missing infrastructure layer, payments get their attention, but wealth builds stickiness. For existing consumer fintech, they become the distribution for this infrastructure. And increasingly, we're seeing an era of super apps. I think recently Elon announced that X is going to launch an investing product within X. That gives you an example of where consolidation is happening in fintech. So while you might be focused on one thing to start out, payment as an example, cross-border transfers or remittance is another example. Wealth is how you can expand your offering and build stickiness by offering more to your customers. Also, in our research, we quickly discovered that users don't want to download another app just to do one extra thing. So if I'm a Nigerian or a Brazilian in New York and I already have a consumer fintech app that I currently use, I do not. There's this apathy right now. There's apathy where I do not want to download another mobile app just to be able to invest in B3 in the Brazilian stocks. So we're seeing that era of consolidation and the era of super apps, and that's where the market is going, and that's how Bluum is positioned to serve fintechs.
Yeah, I think we are definitely entering an era of super apps, an era of consolidation, and you've seen them having even more success in emerging markets because a lot of times there's no infrastructure in there, and then so these super apps come and leapfrog whatever there already was, and so then you end up having a more comprehensive solution than you often have in the US, which I guess I would say the same is true of Bluum. When I was reading through your pitch deck and what you guys actually do, it seems like you're kind of a combination of Alpaca, Apex Clearing, Drive Wealth, Wealthfront, and Stripe all at the same time. Why don't you explain why that model makes more sense in emerging markets and why that's the path that you've opted for?
Because it's expensive. It's expensive to users to have these services spread out. It's expensive to the companies to also have these apps spread out. So in emerging market, to make one thing happen, to launch one feature, you have to build everything. You have to build the payments. You have to build the market access. You have to build BD integrations. And once you build all of that, it just seems like you're doing the work of multiple startups in the West, but it's out of necessity. You don't just wake up one morning and decide you want to be Stripe and Alpaca and all of that in one, but it's inevitable because you wouldn't find a custody partner, for example, that has APIs for you. You have to go build that. You won't find BDs that have APIs for you. You have to go build that. You won't find exchanges that have APIs for you. You have to go build that. And that's how all of this came about.
Definitely, yeah. If it's not there, you need to build it. So
Yeah.
It's quite interesting, and I think it'll be a huge impact on the capital markets in Africa as well as wealth creation across the diaspora. And so I was wondering if you could explain just in human terms the impact that this, if successful, will have in terms of wealth creation in Africa, wealth creation in the diaspora. What do you think this enables that doesn't exist currently?
The biggest effect of Bluum is providing liquidity to the local capital market. Many of the markets, yes, they are returning 50%, or maybe returning 100%. They're not deep. The depth of the market is not really there yet. So those markets need liquidity. And one segment that has been ignored by this market, not intentionally, is retail investors. Retail investors drive the US capital market right now. And that's why one sentiment on X could move the market in one direction or another. That's not institutional. Institutionals are still there, but you have a lot of retail participation. And a lot of these emerging markets, they do have the retail investors. They have a large, young, mobile savvy, investment ready young population. And this population, they're coming onto their own. They are earning now. They're mobile first, let me put it that way. And they're ready to invest. But access has always been the problem. So on one side, on the consumer side, you have access problem. On the market side, there's liquidity problems. You bridge that, and now you can have this new liquidity pool from retail investors to this market. And that goes a long way. It's so fundamental that it changes a lot in the ecosystem. I'll give you an example. There's been chatter about some of the African unicorns or successful startups listed on the local exchanges. One of the reasons they can't is they're not sure the local exchanges have the liquidity pool to support such listings. You provide that liquidity pool, now you can have tech listings locally. They don't need to come to the New York Stock Exchange, which is very expensive. They can give value back to the same people that created value for those companies. So if you're a unicorn company out of Brazil, for example, and you have millions of customers, you became a unicorn off of those customers. When you do go IPO, right, those same customers should be able to capture some of the value they've created. When those companies IPO on the New York Stock Exchange, you've taken value away from them. So providing that access is fundamentally important to solve that value creation, value capture dichotomy and imbalance right now. So that's one. Another thing it solves is VCs that have invested in these companies, they need exit. IPOs, local domestic IPOs, an easy way for them to get this exit without waiting for some US-based IPO that is not happening. I think the IPO backlog in the US market now is, I think, about 5 years. So imagine that. So it's gotten to the point where it's almost inevitable that the local markets need to develop to the point where they can support the ecosystem. And that's both the tech ecosystem. Growth companies should be able to go to the local exchanges for growth capital, not just exit. Now, IPOs don't have to be this exit event where the founders ride to the moon. If I have a good company that's fundamentally sound, that just needs growth capital, those companies should be able to go to their domestic market to go raise that capital. So providing liquidity, retail liquidity, to local market is a big part of our mission.
Definitely, yeah. I think providing liquidity, letting locals take part in the value creation that happens and play a larger part in it are all huge impacts that'll really transform a lot of these places, I'm sure. And I think that especially since you are also focusing on capturing some of those remittance dollars, that will also make a big impact. I would know that retail is developing in some of these places. We talked with Kevin Carter last year, who talked about how retail investors are now actually a bigger piece of the pie than institutional investors in India. But as you mentioned, $130 billion coming in remittances, if some of that could be turned into even more investment in the local markets, that would definitely make a huge impact. And so it's clear what a huge opportunity this is when you put it in those terms. So yeah, we've covered all the opportunities and why this is such a good solution, but why now? Why is this the time to actually get it done? What has changed in terms of technology, regulation, demand that makes this platform possible today?
Yeah, it's an interesting time to be building this project, and it's the right time. And it's a combination of factors. One is the advancement in technology, and that's both crypto, so stablecoins for payment right now has solved a lot of the payment issues of moving money across border. It's faster, it's cheaper, which means the lines are now blurred between investing in another continent versus investing in a domestic market. The biggest reason why that hasn't taken off previously is how long it takes to move money first. You need to move money to be before you then convert that cash into an asset in that market. But with stable coins, you can move money in seconds. So that number of days it used to take is no longer an issue. Then AI, one of the reasons why we've had this lull in financial services where we've solved for income, we've solved for spending, but we've not solved for wealth creation and wealth management, which is what I call how do I grow my money at rest, the middle ground. And that's been the missing financial service in a lot of the emerging market. And a lot of why that has been up until now is just the lack of financial professionals that can offer that service. And if there's a lack of financial professionals, it only makes sense that only the ultra wealthy would get access to these limited financial professionals. But with AI, you can scale that service to a lot more people. And I feel like a lot more people require that service. It's important that the same way I don't advise myself for medical issues, we should take our financial health as serious as our medical health. So being able to provide financial wealth management services to income earning professionals, emerging mass affluent, that middle ground of service, AI makes that possible. So you had on AI with stable coins. Now is the time. And the final piece is just policy change. There's a lot of policy changing in an emerging market. The regulators, the exchanges, they are ready. They see the opportunity, they see the gap, and they're implementing policies to solve for that infrastructural gap. So you combine those policy changes with advancement in technology and a population that is coming onto its own and ready for that service. So demand, now is the time to build it.
Yeah, absolutely. Definitely very exciting times, and it seems like you've got the right solution to take advantage of them. So wishing the best of luck. Thank you so much for joining Ope. Would love to keep in touch and see where Bluum goes. Maybe you'll be on in another year or two and we'll have a lot more to talk about, but really appreciate you joining the podcast.
Thank you for taking the time to speak with me. This is a great opportunity describing Bluum's mission and what we're building out here at Bluum. Thank you.
Thank you for joining us for this episode of the INSEAD Emerging Markets Podcast. To stay up to date on events we may be hosting, emerging market news, and to build your personal network, please feel free to join the INSEAD Alumni Emerging Markets Interest Group on LinkedIn. Thank you for joining us for this episode of the INSEAD Emerging Markets Podcast. To stay up to date on events we may be hosting, emerging market news, and to build your personal network, please feel free to join the INSEAD Alumni Emerging Markets Interest Group on LinkedIn.